Hey everyone, those of you who are good at this game will look at this dystopian government area and immediately realize I'm in Kazakhstan. Except I'm not. I'm in Albany, New York, and it really is dystopian. It's just like there's too much wind out there. I can't record out there because there's just nothing to stop the wind howling amongst these giant government buildings. It's somewhat appropriate though because governments have been dominating the past 12 hours of news flow, led by the absolutely boneheaded announcement regarding trade deficits that was dressed up as a tariff situation. So essentially, what's happened here is it's incredibly to everyone. Donald Trump, all this time, has not been talking about tariffs. He's been talking about trade deficits. He's just got the wrong word, which he says is the most beautiful word in the dictionary, which is tariffs. The problem is he's got the wrong definition of a tariff. So that was bad. And, with Trump, because of the amount of noise that's generated from this sort of policy formulation by press conference approach, the general idea is you don't buy the rumor and sell the news with Trump. You wait for the rumor to be flushed out, and then you, in this case, sell the news. So the market had just been unable to quite believe that major trade deficit attacks dressed as a tariff reciprocation, which we've quickly calculated is not how they've worked out the numbers. They've worked out the numbers based on trade deficits, leads to some absolutely boneheaded stuff. Like Madagascar is the worst affected country because we have a huge trade deficit with Madagascar, probably because it's just about one of the few places in the world where you can actually grow vanilla from the orchids that are required. You can't grow them in the US. Why would you punish Madagascar for being able to grow orchids? It's not as if it's a big amount of money. And some of the other key trading partners obviously have suffered less in theory, but have already suffered, which would be Canada and Mexico, not to mention, everything else. So the whole thing is an absolute disaster and the markets reacted accordingly. But as if that wasn't enough, OPEC then came out and announced they were going to accelerate their production return, which, was just, we were asking Kathleen, our expert on OPEC, Kathleen Kelly, what's the Saudis, what's OPEC getting out of this? And the answer was nothing. The actual answer is they're just really bad at timing announcements, and it was like, dude, don't put that press release out this morning because it's going to be taken atrociously. But did they get anything out of Trump in regards to increasing oil supply? Not really. What was actually happening is that Russia's been interrupting the overproduction of Kazakhstan. There's been, good chance of outages from Venezuela and Iran based on Trump. Potentially interruption to Malaysian smuggling would be another good one. And so the market, after a strong Q1, thanks to the weather, was actually looking in pretty decent shape. They just happened to miss what's going on in the White House, which you would have thought was, something that you might consider, because I'm now at 100% likelihood the US goes into recession. Markets at more like 50%. But everything we look at with what's going on with this trade war, and especially the reactions so far of China and the EU, suggests that this is going to be a trade war, and it's going to be really bad for the US economy, which is coming off such a high base. And at the same time, what's driven the economy so strongly for really the past 10 years, but particularly the last 5, has been government spending. Really since the global financial crisis, but particularly since COVID, and that government spending is going to get cut, which is a good thing. They need to do it, but it's going to be very negative economically, and it's going to be absolutely exacerbated by a trade war, which is just one of the worst economic policies as anyone has ever actually seen. And you should read The Economist today in terms of what they're saying about it. Been published since 1843, is a proponent of free trade, but nevertheless, my goodness, they unload on what Trump said and the rationale behind what he's doing and whether or not it's going to succeed or not, because it won't. For OPEC, as I said, the market looks okay, but if we go into a recession, it's not going to be okay anymore, and that leads us to be very concerned about refining. The stellar performer today has been natural gas, and as I said, it's pretty cold here, so natural gas looks like a great place to hide. Another stock that really stood out to me, which is irrelevant to me really, but Philip Morris. But every time I go to the deli, there's like three 22-year-olds trying to buy the latest flavor of Zin, and that one's performing outrageously well, but we can't really claim to be tobacco analysts at this point. But natural gas is similarly really standing out as green in a red tape. On the oilfield service side, people talking about Liberation Day are having a bit of a laugh, because Liberty Oilfield Services, which was Chris Wright, Energy Secretary's former company, he was CEO, got absolutely crushed today, and this environment looks really rough for service companies, so you want to avoid those. And people think that volumes will still stay high. The LNG, the gas story, is still remaining very strong, so midstream looks like a good place to hide. But broadly speaking, we're recommending gold. It's as simple as that. And one of our top clients is actually out today calling for $4,000 gold. Why would we be calling for gold? Well, what's happened here is a bigger deal than just all this trade noise and everything else. What's happened is a post-World War II construct has collapsed. And that was essentially the combination of American exceptionalism, which is the idea that the American system is superior to anyone else's because it was designed later and more successful with the strong constitution, which is vital that that constitution holds at this point. But American exceptionalism and globalism has given way to American isolationism, which is a boneheaded strategy, but nevertheless, that's what we're getting. And at the same time, the America has started denigrating and doubting whether they want to, which is fair enough, whether they want to pay for European defense and everything else, which is not inconvenient for Europe because Russia has proved itself to be completely weak. I mean, militarily a disaster and hasn't used nukes. So Europe's in actually very good shape to change back to being more self-dependent and less dependent on the US. Japan similarly can increase its spending. Post-World War II construct has completely therefore fallen apart. You've really handed power to China here. And all of that's a very big deal with one major issue, which is we no longer really know what the risk-free rate is because you can't buy US treasuries anymore in the knowledge that they are the dollar of last resort because the US government is more or less telling you to pick up your things and go home. And that's why there's been a massive run on gold, and that's likely to continue. It also massively challenges equity valuations because you just don't know what the cost of capital is now. And if you take the example of the idea that the US spent the most on military and therefore the dollar was the currency of last resort, now what the US is saying is, for example, Donald Trump the other day announced that if they sold the next generation fighter jets, haven't even finished the last generation, but if you do, you might have to reduce their capacity, their capability by 10% because your allies might turn into enemies. This is literally his statement. That means that you're not going to buy US military anymore and you're going to defend yourselves. And that means the dollar's role in all this is highly questionable. At the same time, the US government's ability, the IRS's ability to just take control of Bitcoin undermines that as a risk-free asset. And so essentially the risk-free rate is going up a lot. We're just not sure by how much. And people are prepared to buy gold despite the fact it has no yield because you assume everything else is going to go down more than as gold goes up. And it's as negative as that right now. So I'm sorry to say it's not great news. We still love natural gas. It's looking great. But pretty much everything else is looking like it's in a lot of trouble unless you're buying gold or a tobacco stock. Have a great day.